In this video, we're going to discuss 4 things that would indicate a material weakness in a company's internal controls. So first, if the auditor throughout the course of performing the audit finds that there's a material misstatement in the client's financial statements and the client's internal controls did not prevent that material misstatement from occurring, that would indicate there's a material weakness in internal control. By definition, you basically you did the audit and you said, okay, there's a material misstatement of revenue. Maybe revenue is materially overstated. And you say, okay, clearly, if I'm finding this material misstatement in the client's financial statements, the internal controls did not catch it. So we would say that that is a material weakness. Now, if the auditor finds throughout the course of the audit, maybe they don't find a material misstatement, but instead they find that the audit committee of the client is not doing its job. And by not doing its job, I said, remember the audit committee's job is to provide oversight for the financial reporting process of the client and also for the internal controls. Okay, so that's the audit committee's job, is to provide this oversight. And if the audit committee isn't doing that, maybe they're checked out, they're just for whatever reason lazy, they're too busy, they're not effectively doing their job, then the auditor could say, hey, we've got a material weakness here in internal control because this organization, this group, the audit committee, this subcommittee of the board of directors, they're supposed to be overseeing the financial reporting process and the internal controls, and they're not doing that. Another issue where you're going to have a material weakness would be if the company restates their financial statements, maybe from a prior period, they had a material misstatement in the financial statements, and you're saying, okay, look, you've already you are restating because of a material misstatement. Thus, clearly there is a material weakness in your internal controls. And also, if for any reason throughout the course of the audit, the auditor were to find out that a member of the senior management, I'm talking like the CEO, the CFO, somebody really high up, committed any type of fraud, it doesn't matter if it's material or immaterial, the magnitude is not important. If there is a member of senior management that committed fraud, then you'd say that there's a material weakness in the internal controls. Now, these aren't the only things that would lead to a material weakness. There are many things, but these are just some things that you might find in practice.